1, 2, 3, 4.
Hello. Welcome everyone to Money Market Truth, presented by the Come Up series. We're part of the Come Up series every Thursday. Come by, check us out. How you doing, Mo?
I'm good, man. How you doing?
I'm doing good. Should we introduce ourselves again, just in case we got a new subscriber?
Sure,
let's
we
do
should.
it. Okay, you go first this time.
I'm Mo from OTB Clubhouse. Are we doing the full introduction or?
Let's go for it. Why not?
Okay, cool. All right, guys. My name is Mo. I'm a day trader and a real estate investor. We do this every Thursday, and we talk about market. And I'm passing on to you, Mark. Mark's trying to throw me off. Like,
no, man, it's all good. Hey, everyone, my name is Mark. I am with Uncultured Currency and Half Breed Observer. I am a YouTuber, an investor, a trader, and a 9-to-5er. Yeah, I know it's not cool to have a 9-to-5 job, but I do, and I don't mind it because I love it. I have the leverage at my job versus the other way around. Man, how you been, man? It's been about a week, right?
Yeah.
So how you been?
Good, man. I'm glad we had the long weekend. Now we I love long weekends because then you get 3 days off and then the next week's short. And I get to chill. I've lately been not trading as intensely and I've been loving it. So I've been swing trading a lot. Most of my trades are like a month, 2 month out. And I've been sort of staying away from indexes. If I am trading something, it's mostly weeklies. And I feel a lot better doing that.
Good. Yeah, my trading's been pretty good with collecting the premiums and stuff. I am back on futures a little bit. I did pretty good past the combine and stuff. I talked about it in the video that I did. So again, shameless plug. If you guys are interested in how the trading with other people's money works, go over to my YouTube channel, Uncultured Currency. You can watch one of the videos there as well. Before we get started though, man, I would like to thank everyone, literally everyone. I see right now, I think there's like 35 people on YouTube. I don't know how many people are in LinkedIn, but we would like to say thank you so much for taking your time to watch us on a Thursday night. We really appreciate it. Like the love that you guys are showing us, we really, really appreciate it. And thank you, because I know in the finance space is a little iffy these days. So we do appreciate the fact that you guys tune in every single time and allow me and Mo to speak to y'all. And hopefully you are entertained here on the Come Up series with us. Yeah, man. So this week, man, it's been a little bit of drama. We're not going to really talk about it here on this channel, but it's been a lot of dominoes are falling right now. A lot of dominoes within the finance and business and entrepreneur space is falling right now. So,
dude, apart from that drama, you're not on TikTok. I know you can't be on TikTok, but I've been watching these funny podcasts where there's like a bunch of dudes that are just saying random BS or common sense stuff and they're posting it as podcast. But then what they're trying to tell people is a lot of podcasts are giving out stuff without backing it up with actual stuff. And so people just believe anything and everything. Like, example, you could just say 80% of trading is charting or 80% of trading is doing squats in the morning and doing ice showers. And people will believe it that don't know much. So like, if you've noticed, I've been saying like, let's just talk about trading. I want to get a little bit away from macro because I come here and say Tesla's going to go to 60. People go home and like, okay, let me start buying puts or let me stop. So I want to start like just level-based information and give very factual information. I want to give no room for opinions anymore.
I agree with you. Now, I do a lot of opinion-related stuff, but usually when I say in my opinion, you guys should know that it's just my personal opinion. Let me mute everything. People's blowing my phone up right now. So yeah, make sure y'all smash that like button, by the way, like for real. But before we get into Hot Take Thursdays, we're going to have an open mic today. We don't really know how we want to rename this yet, but we're planning on moving forward every other Thursday when we do the Hot Take Thursdays. We want to include you guys in the conversation. So at the end, after we go through the hot takes, we would love for you guys to go ahead and pop in. You're more than welcome to come in. You can ask us some questions, or if you have some sort of input on something, by all means, I am going to drop the StreamYard link right here. So you're more than welcome to go ahead and jump in now if you want. You're going to be in the background, so we won't bring you on until we get to the Q&A section. But we do have a question for y'all in the comments after this episode. Give us some ideas for some names that we could use for this type of thing. We were thinking about open mic, but I don't know if that's cool enough or not. I don't know. We're two nerdy dudes, so you guys should definitely help us with that. So yeah, man. Other than that, the overall NVIDIA. I do want to talk about NVIDIA before we get into the hot takes real quick. Man, it's been on a run, right? Well,
yeah. Can I give a shout out to one person quickly? So
Yeah.
last open mic, someone brought up the stock called Twilio, TWLO, and
Twilio, yep.
went over the stock. I basically ended it, texted Mark. I'm like, this thing looks insane. And the stock's up around 25%. So good job. That was amazing. And that's why I think we need to do open mic, because there's what, 60 people here, and we're all looking at different stocks. So sometimes, you know, something I was not even looking at. Well, that wasn't even in my watch list. So great job on bringing that up. I forgot your name. If you're here, just let us know. Great job.
Yeah, that was awesome. That was definitely. Did you take the trade?
No, I didn't, but
Okay.
But it was an amazing trade to take. So yeah, good job.
Yeah, I didn't take the trade either. In fact, I think we also mentioned the VIX. I mentioned the VIX. That was a good play. I didn't execute myself. I totally forgot about it the next day, because anytime it drops like to the low 16s or in the 15s, I tend to buy it. I did buy some for next, is it 2 weeks from now? I think I have a 2 weeks from now expiration at $17 call. So hopefully that pans out. I think there's going to be some news and stuff that's going to come that's going to kind of push it up again as usual. Let's talk about one thing that we've been wrong on, NVIDIA. Right? We were trying to short it back in when it was what, 260 at 280, and it's just been going crazy. Been on a crazy run, but it's finally cooling off, I think, because I ended up buying NVDS shares, which is the inverse to NVIDIA. It dropped into the 9s, and that's when I started buying shares just to hold, because I don't know when NVIDIA is going to really, really cool off. What's your thoughts on that?
So I think 2 weeks before earnings, I tweeted that I was wrong. I could clearly, like, there's something called Fibonacci retracement. I use that a lot, and I'm going to show you guys today. That is a very non-biased way to know when your thesis is going wrong, because it will tell you if it's a retracement or a reversal. On that level, we broke 0.61, and that's when I'm like, okay, you know, this will keep going. I still think NVIDIA can go to 500, and we could potentially go to 4,500, but I'll give you my bias thesis. I think we are going to go back down, and I'm going to show you why. But we're day traders, so we're going to show you levels. I'm going to show you levels on what. If you're buying stocks, solid. If you're buying options, look at day trades. But yeah, I think NVIDIA can go up higher to about 500. A lot of people thought that the gap up that happened on NVIDIA earnings were short interest. It wasn't short. It was real buying. It's funds that were just shitting when they saw how up it was, and they were all sitting on cash. So they basically started pouring in and buying. And when that happens, there is no pullback. The pullback yesterday was just rebalancing, and people started shorting. So yeah, that's my opinion.
Okay, I still think it's going to pull back a little bit further, at least to 280s. My thinking, at least. So we'll see. But listen, I bought shares. I got NVDS, so I will definitely shave off a quarter at a time while it's dropping. So we'll see what happens. But all right, let's go. Let's get into the hot takes. You ready, Mo?
Let's do it.
Let's cue it up.
Oh, yeah, distress beacon. Oh, yeah, baby.
Here we go again, Morty. Now, here we go. And here comes the hot takes with Mark and Mo. All right, get ready. All right, let's get this.
All right. So the first topic of the day is the debt ceiling. The House has officially passed the debt ceiling and is now sitting with the Senate. So it's 99 pages. You have the opportunity to go ahead and skim through it. I know there's a lot of pages and there's a lot of information in there. But we were hearing a lot of June 1st date. I remember when I first heard it, I was like, June 1st, where'd they get that date from? Now it's been extended to June 5th. And essentially, so this is my opinion. The Treasury Secretary Yellen, I feel like, was being extremely dramatic by setting June 1st initially. Now she's extending it to June 5th, stating that that's the date that we're going to run out of money here in America. Now, I'm going to be honest with y'all. I think this is just a scare tactic and that she's a straight up liar in this situation. I think it's just a way to get, the Senate to step it up a little bit. Her urgency is key here. And I don't think that we're going to default on the debt. Like I said, the House already passed it. if you look through the bill, it's kind of bipartisan depending on which news outlet you want to listen to. But for the most part, it seems like everyone kind of got a little bit of what they're looking for. First and foremost, in the bill, so if this does officially pass through the Senate, this gives 2 years of funding. So the current administration will not have to deal with it. It will be a next administration. If it's the same one, then they deal with it again 2 years from now. However, here are some of the stuff that was under this bill. So under the deal, non-defense spending would remain relatively flat in fiscal year 2024 and increase by 1% in fiscal year 2025. Under the deal, 11, I read it says 11 or 28 billion. I feel like it's a massive gap there, depending on what outlet you're reading. I saw 11, then I saw 28 billion in rescinded unobligated COVID-19 relief funds are being shifted, and $10 billion in money is being shifted from the IRS, which will be used to beef up non-defense discretionary spending. Also, 10 billion in funds are being repurposed for mandatory programs, and 23 billion that is designated as emergency funding would be shifted as well. They're also going to start restarting the student loan repayments. So everyone who was really voting based off of the hopes that the administration is going to pay off your student loans, I really likely think it's not going to happen. So I think people have to have that mindset and understand that politicians make promises that they're not going to deliver, and this is definitely going to be one of them. Another policy I definitely don't think is going to pass at all is this reparations. I think that's just a waste of taxpayers' dollars. It's just talking points to get people emotionally invested and think that people care about them. It's not going to pass. It's literally just wasting money. Because I don't know if you guys have been following the whole reparations. It's completely off topic, of course, what I'm talking about right now. But if you pay attention, they even said, let's say they pass the reparations. How are you going to fund it? Oh, well, that's not our responsibility. We don't deal with how it's going to get paid out. So we're just a task force. So it's wasting money. All right, back to the bill. So basically, the core of this deal is the suspension of the debt ceiling. Currently, we're at $31.4 trillion. And the plan is to basically, suspend that all the way until January 1st, 2025. And the Treasury Department could then use extraordinary measures to pay the bills, which will last several months. Now, the market has been reacting to this, right, Mo?
Yeah.
I think initially I was expecting, regardless, once it gets passed, whether it gets passed or we go in default, I was expecting a drop. What's your thoughts?
So historically, as a trader, the only thing I'm waiting for it to pass so I can add puts on key levels. Historically, it goes down. And with the whole student loan thing, that's no way positive, right? A lot of people are bullish about this. They think that's going to solve world problems. But this whole student loan thing, it's a massive issue, right? I don't know. So let me ask you this, Mark, because I don't know the answer to this. A lot of people took those loans around COVID, right? In Canada, those loans are all due end of this year. Do you know when they're due for US? Because there's a lot of grants that were given.
Yeah, I haven't been following it because we didn't take it. I remember my wife's business was eligible for it, and we specifically didn't take it because there's nothing free here in America. And I know they were saying, we give you free money, you don't have to repay it back, you just follow this paperwork. But no, I don't know when it's due. I did not touch it. We did not take advantage of it because I was worried for exactly what's happening now. I see a lot of people who are getting arrested for it. Their businesses are getting shut down. They're being taxed. They're asking for their money back. So I don't know. I haven't been keeping up on it at all. Maybe if someone in the comments knows, definitely drop it in there. Let us know when that.
Yeah, I was going to ask you, if you guys have a small business and you know anything, I'd love to know. In Canada, what they did, if you're a small business, they gave you $60,000 and basically they gave it to you for a year. Then they extended it. Now what they're saying is end of this year, December 31st, if you don't pay, you only need to pay back 40K. You keep 20K. But if you don't pay the 40K back, you're going to get charged interest on the entire 60K starting January 1st. So that's a pretty big deal. There's a lot of almost every single small business applied for it. So yeah, it's going to be a big deal.
Ooh, okay. Yeah.
Sarah's saying that a large amount of business loans were already forgiven in states.
Okay, well, that's good to know. Like, again, I have no knowledge on this because we did not take advantage of it. And I want to know if it's really forgiven or not. I mean, in the end of the day, taxpayers here are paying for all this stuff anyways. There's nothing free here in America. All right, next topic. You ready?
Yeah, let's do it.
All right. Next one. Goldman Sachs. We got some amazing top stock picks by Goldman Sachs. They call it the director's cut. Let's share it right here. These are some of the stocks that Goldman Sachs released today. I accidentally paid for CNBC Pro, a waste of $300. So if anyone's ever curious, don't waste your money on the CNBC app. I don't know how I didn't cancel. Anyways, they have Bath and Body Works. Price is currently at $35. They believe that the price target that they have for it is $50 at 42% upside. I don't know much about Bath and Body Works. You?
I have trauma with that ticker. I don't think it's the one. It's the one I was thinking is Bath, Body and Beyond, the BBBY.
Oh, Bed Bath and Beyond.
They went bankrupt. So I like looked at it. I'm like, yo, are they looking for exit liquidity? Like, just put that on the top so people buy it. This stuff is usually a trap, to be honest. I don't know if you guys know, they put the list is based on what they buy and what they own. They can't put names that they don't have. So
yes, and and I'm looking at this. I can point out some ones that I do like. JP Morgan, of course, I think is a solid bank. So it's currently at 136 is what they're saying. Their upside, their price target is 174, so 28% upside. Then they have what's the other one? Oh, Merck & Co. So healthcare. That one is iffy. I kind of stay away from a lot of healthcare sector stuff related because I know that one can fluctuate depending on news. And it's currently at 110. They're saying 129, so 17% upside. What I do like, I like First Solar Inc. It's currently at 203. They're estimating 272, 34% upside. Amazon, of course, is just obvious. I think everyone likes Amazon. What's their price target for Amazon? 165. Nice. 37% upside. And Warner Brothers Discovery. I've been seeing a lot of people are getting bullish on Warner Brothers. I have been eyeing that for a while as well. I've done some cover calls on it. I like Warner Brothers long term. So if you're an investor, I think this price isn't that bad. That's my personal opinion. I don't think this price is that bad. And if it ends up dipping even lower, accumulate some. They're going through a phase of cutting back a lot of the fat. So they've made some mistakes in the past. They're trying to readjust. They're trying to write off a lot and cancel a lot of projects that they had planned to invest. If you don't know what Warner Brothers is, HBO Max, now called Max, their streaming service. They put a lot of effort into that. So I like it as a streaming service. I think it could be a good contender and one of the top 3 that will survive. Just not right now. They still need to do some more adjustments, but I do see a beautiful light at the end of the tunnel as an investor 5 to 10 years from now. Currently, they say the stock is at $11. I don't think it's at $11. I feel like it's a little bit higher than that. Yeah, can you pull that up? I think it's higher than that, but their price target for Warner Brothers is $21. So an 86% upside. That's pretty good. And honestly, if the market changes for some reason, I could see that happening just based off the fact that it's been beaten up so much and is at such a low valuation currently. And we just talked about NVIDIA too a few minutes ago. It's going to be a $1 trillion company here soon. So that's awesome. And if Apple continues to move up, it's going to be a $3 trillion, I think, or $4 trillion, one or the other. So this is short squeeze. Someone smooth is saying is a short squeeze. So this is very interesting. So we'll see. I do like Warner Brothers, but just be careful for those. Are any of these stand out to you that you like?
So WBD, it's 1135 currently. Okay. I would pick personally Shop over Amazon. Shop has a lot more room to go. Do you remember when we had the person, I forgot, I apologize, the person that did the wheel strategy?
Yeah.
I have the same sort of thinking. I'm not saying Shop is better than Amazon. I'm thinking which one's going to double faster. So
I got you. Yes.
That's how I think. I'll tell you another name. It's going to freak people out. Affirm. It used to be $110. It's at $14 right now. I like it. Not going to get short squeezed.
This is a trade, though. So y'all remember, warning. This is a trade. He's a trader. Okay, this is not right. You're talking about trading, not investing, correct?
Yeah. There's always a stop. I'm not like, let me hold it. It's going to, and I hope it'll go up. Like, no, 55 is my stop for Shop. If it breaks 55, if you look at it, yesterday went to 55.50 or something, bounce back up. But my logic will go over it. The term is sector rotation. We'll talk about it in a bit. But yeah, go ahead.
Okay. Oh yeah, I'm looking at shop right now. Oh wow, year to date, 62% up. I didn't know it ran like that. I know it got beaten up for a while. Some of their earnings was pretty bad. It went as low as $23.63. So here's where I think we kind of dropped the ball, Mo, a little bit. A lot of these growth stocks got their asses handed to them past year and a half, 2 years, because a lot of them are not profitable. A lot of it was speculations. A lot of it was hope, right? And it seems like the market just completely disregarded that right now, and everything is running, especially these growth stocks, all the ones that got beaten up. So if you're one of those people who likes to add risk into your portfolio and you bought some of these or dollar cost average on some, good for you. Congratulations. I'm not that type of person.
I'll tell you this. I said this. I'm not looking to pick the bottom. I've been saying that for a year. I'm looking for it to break. So I'll give you the secret. 50 moving average. That's this on daily 50 moving average. We've taken 9 trades in the last 2.5 months, all entry exits. I don't know if there's any. Sarah's from the Discord. She can confirm. Not a single one failed. 50 moving average. That's it. Roblox.
Are you saying 15 or 50?
50 moving average. Roblox just broke 50 and it went nuts. Tesla is at the cusp of 50 moving average. We could keep going up. That's what I watch for. PayPal. I'm going to most likely add stocks on PayPal. PayPal was, I think, 64-ish today. I added calls. I think PayPal had $75 calls come in for $1 million. We'll go over that stuff. But my point is, I'm not looking to add below 200. I have a certain level where I'll add, and if it breaks back, I'll get out. That's sort of like my mentality, and I understand. Like, Mark, we talked about Nanox, right? It went all the way down to $6, and all you did was if you average down, like that gentleman that came, he loves SoFi, and like look at where SoFi is, look at where that strategy works for him, but it wouldn't have worked in 21. It wouldn't have worked 2022, and it takes 1 year of it not working for you to go bankrupt. So that's why I'm looking for something consistent. But he's doing a deal. He's collecting premium, so he's got other ways to make money. So that will work for him. 50-day moving average on daily chart.
Yeah, on a daily chart. So I will say this too. Yeah, with all these growth stocks, honestly, I really do like doing cash secure puts on those. If you plan on actually buying 100 shares, I think is a really smart way to get into some of these growth stocks. Like, because TJ was talking about that. I mean, he's been dollar cost averaging. He's got his whole plan. So he plays with a lot of those volatile growth stocks. I'm not a fan of that. I like more blue chip, more stable. Ford is my cheap baby that always makes me money. So I like that one. But yes, I think if you a lot of people did pretty well with some of these growth stocks, the way they're running right now. I wouldn't hold long term on some of these, and I would definitely take some profit, at least take some profit, because you never know. On another note, though, you mentioned PayPal. I shared my current trading portfolio on Instagram. I am in PayPal as well. But I'm doing the I have a cash. I thought it was a vertical. I looked at it after our podcast last week or 2 weeks ago. It's a vertical. I got a vertical put credit spread on it, so it's a bullish trade, and it's doing pretty well so far. I don't like PayPal as an investment long term. I like it as a trade. So that's just my 2 cents for that. All right, you ready to go into what you want to cover here?
Yeah, I want to talk. Well, I'll just talk about what we've been talking about. So let's just.
Your mic went off.
All right. Okay. How do I do this full screen?
Oh, you want to do full screen? All right, let's do it. There you go.
Okay, so let's zoom in. Let's look at PayPal. We're going to go over a couple of things, okay? So daily chart, okay? We're going to add. So I'm adding this one prematurely. It hasn't done 50 moving average yet. Give me 1 second. So this is where I think, or close to where I think we can get around 69, and it's a trade for me. It's not an investment for me. It's the option that I added for July 21 contracts. You could search what the flow was, but it was, let me give you the exact line that got hit. I didn't take that because that was too out the money. And let me get you the contract. It was 72.5 for July 21 for 1.16 million. I'll repeat, it was July 21, strike price was 72.5 and it was 1.16. It was something crazy cheap, like 85 cents or something. That's way too out the money for me. So I picked a closer strike price, but this is what I'm sort of looking for. I want to show you guys. Let me call this a mid-year review, and what we're using here, it's called Fibonacci retracement. And the way we've drawn it, so you guys understand what we're doing here, we've taken the top of the market, and that was around November 21, and we've taken the bottom of QQQ in this case, that was 13th of October. With that, we get certain levels, and I'm going to tell you what the key levels are. The key levels are on 50th percentile and 0.618. These two are the ones that tell you that we have changed, reversed course in terms of bullish to bearish, just in terms of technical. So 329 was a key level. Once we broke it, 347 has been major. We've had 4 candles just chilling there for the last 4 days. So tomorrow will be key, and there's a daily supply right on top of it. Consider daily supply as a sell zone. We tried hitting it 2 days ago. We failed. We tried yesterday. We failed. Today, we got on the top of the supply zone. So if we break this level on the upside, the next level is 372. However, if we get under 347 on a daily time frame, not on a 5-minute, if we get under 347 on the dot, on under daily, there's a reversal, meaning we could go down, as in touch the bottom. To start with, we can go to 329, and then the next level is 311. This is QQQ chart. It's a daily time frame, and we're using Fibonacci retracement. This is pretty key. Based on what I'm watching here, I don't want to call it sector. I see a market rotation happening. Right now, the stocks are running by 3 or 4 names, okay? Let me play a video right after this, but let me give you the exact report. 10 stocks have brought up the market up by 97%, 10 stocks. So the breadth of the market's very small. This is not a gamma squeeze. Gamma squeeze, this is not a short squeeze yet. This is real people buying with real money. So that's good for bulls. But if we fail this area, we can get the sell-off very fast. Now, I've said this before, I'll say this again. Market is made to go up long-term. Simple as that. That's why S&P 500 has the best companies. They do good, market goes up. For the market to go down, there needs to be some sort of news. There's 2 news that are coming. First news is your debt ceiling. Historically, after debt ceiling, we sell off. That's your window of weakness. Second is we've got quad witching coming. And this one's going to be the biggest quad witching. From now until June 16th, which is your OPEC date, you could see big moves. There's 2 levels that you want to watch out to where we can pin at, meaning that's where we can close on June 16th. Level 1 is either 4,300. If we close at 4,300, you're looking at a next leg up to 4,500. On the reverse, the other pinning point is 4,000. If we get to SPX 4,000, then we got more lows coming in. So that's what you got to watch out for. Let me add this video. I got to do this one a little bit different. Let me hold on because the audio won't play otherwise. Give me 1 second.
Yeah, and while you're doing that, you said 10 stocks are holding up the market. Now I know there's a big 3 tech stocks that are holding it up. Microsoft, clearly AI. So for everyone who's into AI, I know you guys saw the C3 AI. It crashed. It's a crap company. Always has been. I didn't trust it. I expected it to go down. I tried to do an iron condor to play with it as paper money. Did not work out. But the 3 big stocks, Microsoft, Apple, and Meta, those 3 have been running like crazy. I think Apple may soon hit all-time high. Meta, I think, is currently 52-week high, isn't it? Or is it getting close there? So is Microsoft. So those 3 are close to the 52-week high. Don't feel like you missed the boat. I'm sure there will be a correction coming, at least somewhat of a pullback, but we'll see. All right, Mo, you got it ready?
Yeah, let's do it.
Right. So the vol is very compressed. Indexes are pinned. We're at over 1-year lows kind of in realized vol. Implied vol has followed suit. And guess what? Only 10 stocks represent 97%, right, of the increase in the market. And so something has to, as all the other stocks are declining, something has to counterbalance that. And that is, not surprisingly, the short vol center, which is all those calls being bought in NVIDIA. 8 days ago, we had record levels of call buying in those names. That speculation is forcing dealers short vol in that complex. And this is a simple dispersion trade at its finest, right? And this is market microstructure at work. This is why breadth matters. It gives you, when the index is not moving, but the majority of the stocks start going down, that tells you something about the reality, the fundamental realities of liquidity versus what might be happening just structurally under the hood. And when you start to see divergences, not just like that, but in other parts of the market, that's a clue that this is a flows-based phenomenon and not a fundamental phenomenon. When those divergences happen, that's generally a very, very good clue to what might be coming.
So I want to just wrap this up because I don't want to take too much time. Mark, if you want to open it up for questions, my part's done.
All right. Yep. So that will conclude Hot Take Thursdays. Now we're going to open up the floor. All you have to do is click on that StreamYard link that's in the chat. You're more than welcome to come in or ask any questions. If you don't feel comfortable coming in and asking questions, by all means, feel free to go ahead and ask some questions here in the chat. If we don't get anything, we'll just wrap it up for the day. But first of all, thank you. 90 people are in the chat today. That's amazing. Thank you so much. Seriously, y'all, thank you. Make sure you click thumbs up and share the video if you would like. So the floor is open. All right, Mo. Is there anything else you want to talk about, Mo, while we wait to see if someone's going to come in here? What's your...
Yeah. Well, the biggest thing, like, I keep hearing from people is, like, I see people just post profit screenshots, and, like, social media is getting to a point where it's getting toxic too. People are like, people are saying market's going to go up. People are saying market will go down. And a lot of people are just confused because people aren't taking accountability. For the last 3-4 days, people have been saying market will go down. And it's been happening for months, but they keep losing money, yet they keep telling people to buy puts. So I think playing level to level is best, which is why I'm getting away from the macro, because I feel like that can mess up with people's mind. Like, I think Tesla will do 60, but right now I'm in Tesla calls because I think we're getting to 245 first. Does that make sense? Like, and so I want to make sure, like, people understand that, like, there's macro and there's micro. I'm starting to realize that macro doesn't really help people at all because it's good for entertainment, but how do you make money tomorrow? So that's what I want to focus on. Like, 50 moving average on stocks, if they're above it, that shows strength. That's something that can help you when you're looking at it. Fibonacci retracement, that's something that can help you. A lot of TOS, so not TOS, a lot of brokerages have free Fibonacci. They work somewhat. You can use that as well. They should give you an idea of what the stock is doing from its all-time high to all-time low.
Yeah, with some of these indicators like the RSI, I know a lot of people have the RSI, that the 50, have the 200, they have the 9 indicators. All these indicators, just remember they're delayed. Okay, so don't solely rely on them. They're there just to confirm your trade. If you are unsure what to use, always use supply and demand. That's what me and Mo both use. We've talked about that in the past. I think one of our very first episodes, Mo, didn't you go over supply and demand shortly? And just try to show people exactly how to find supply and demand. Because when he pulls up his charts, you'll see the red is usually the supply, the green or yellow. What is it? You use green or yellow? I use yellow. You use green, right?
Is demand, buy zone, sell zone, supply, red.
Yep. And that's also a way where you can get your entry points for your stocks. Because during the bear market, I was plotting out all the demand zones on stocks that I want to buy, and majority of them hit. That's really how you can get a lot of your levels. Just go to the daily or the weekly or even a monthly, start drawing your demand zones if you want to buy shares in certain companies. They're not going to always hit, but the further out the time frame, so like the monthly or the weekly demand zones, you have a better chance of getting some pretty good prices. You just got to be patient. I've been killing it with buying almost the bottom I'm just terrible at selling when I should be selling. So that's where I sometimes have issues. Just so far this year, I've been good. I'm profitable this year, so I can't complain. So 6 more
So,
months to
Mark,
go.
they have a couple of questions. We'll go with them. I
Sure.
see two. We'll go over them. The first question is, I'm in Tesla calls. Does this mean Mark Monroe is correct about Tesla? It's perspective and context. So I'll explain you why. Is Mark in stocks? It doesn't really matter. He's going to keep averaging down. It doesn't matter. We could be both right. We could be both wrong. And the idea is, what's the time frame? I said, I shouldn't say me and Mark came here when Tesla was around 400-ish. We still go down to 150. It went down all the way to 100, then popped back up. I still think this thing's going back to 60. But long term, this information doesn't help you at all. So I don't want to talk about it. But level wise, 245 in my opinion. 208 needed to break. Today 208 broke. First 205, then 208, 215, then 225, then 245. Those are my levels. You got to ask yourself, what is your goal? And then only listen to people that have the same goal. So if I'm trading and you're investing, our goals will match. So when me and Mark talk, there's no point arguing because we have a completely different goal in what we're going to do with that. Like my calls are for June 16th. After June 16th, I don't care. That's sort of how I trade. Second question is, do you have any comments on that, Mark?
No, I'm still overall bearish on Tesla for this year. Last year we were right so far. This year it's not playing out. Tesla is running pretty well, but I do keep my eye on Tesla. I like the car, but I still fundamentally think that it is, for the most part, right now, a car company. Until I see it differently in the earnings, if I see that things are shifting, that's when my thesis may change. I know a lot of people are betting on Tesla in the future and what is planning on bringing. I get that. Everyone has their own opinion. I'm just not a super duper Elon simp and believe that everything he says is going to come to fruition, because there's a lot of stuff he said that hasn't. So I just want to see how things play out. But you guys already know I trade Tesla. And if Tesla's too expensive for you at this point, also look at TSLL. That's what I would trade the last time when I touched Tesla. Bought shares in TSLL and I sold them recently once Tesla got in the 190s. Could have held it longer if I wanted to. But if you were a believer in Tesla, it doesn't matter what Mark Monroe says. It doesn't matter what we say. Stick to your thesis. This is why a lot of these dominoes are falling within the finance community, because a lot of people are relying on the content creators and the entertainers and the people talking like me and Mo. We have certain opinions and perspectives on stocks and companies, and we come here and we share our thoughts. Ultimately, though, you do need to do your own due diligence. For example, I've been shitting on Palantir for years. Until recently, I've been right. I actually know what Palantir does. Not a fan. I don't like the way the company is ran. I think they dilute the shit out of their shareholders, but it's running up because of AI. Who would have thought that Palantir was going to actually remain over $10 right now? And it's been running, and I think it may be potentially short squeeze. I don't know, but it's running. I don't think it's worth $14. I don't think it's worth $10. I think it's a lot of it has to do with AI. But again, that is my thesis on it. It's my thoughts. Make your own thesis. You saw TJ come here. He's a believer in Palantir. A lot of people are believers in Palantir and SoFi. There's a whole community of people out there. One of my buddies, Amit, loves it. His whole channel is about Palantir. And no matter what I tell him, he stuck to his guns. Yes, he bought at 20 and I think at 15. I think his average is at 15. But he kept buying even when it went down to $5. And now look at it. And people who bought it at $5 or $6 or $7, they're like, you were wrong, because they're up 40% right now, 40 to 50%. So, but as for, there was another question there. It says, hey, I just joined. What's your take long-term on Tesla versus NVIDIA that have the best future growth? Now, I guess we just talked about Tesla, so more on NVIDIA. What's your thoughts on NVIDIA?
Are you asking me?
Yeah.
Oh, so I think what's happening here is quickly cover. There's a sector rotation going on and market rotation, and the laggers are running, which is why I said shop PayPal. And it doesn't matter what we think in terms of PE ratio and all that crap. It's just, they're just catching up. So that's why everything's moving up. That's why I'm like, okay, let me add shop, let me add a firm. That's why we're doing that. I think NVIDIA, people will take profit. Like Kathy's been selling it nonstop. The money will move to Tesla because people are looking at percent. They're not looking at PE ratio. They're not. It's the profile of people that buy NVIDIA also buy Tesla. Okay, there's no doubt about that. And so they're taking profits and moving the money to Tesla and other companies. I was live yesterday and I talked about this. Yesterday, you saw what they were selling. They were selling NVIDIA, Apple, Meta. They were buying Tesla. So the money is moving, and you're going to start seeing small and mid cap come in rotation soon. So that's what you want to keep an eye on. And for me, like what Mark was saying, that a lot of people come in and they give you their thesis. Personally, when I'm a trader, I'm not an entertainer, I'm not an investor. I come in. If I'm giving you anything trading related, I'm actually in it, or I have like some sort of money in it. And that's why I said PayPal, Shop, Affirm, and they get called out live. So when I'm actually talking about macro thesis, I got zero to do with it. Like I'm not short Tesla share. I do have NVDS and my average is pretty high. I'm at 19.5 full transparency. That was my first ad. I'm just waiting. I haven't added. I will add, but that's sort of like what I do. But that's not as an investor position. That's still a trading position. I think now that we're talking about macro, I think by next summer, we should have a full-blown recession with the target levels I'm talking about for all of these companies. Just to give you a time frame, because a lot of people say market will go down and then it goes down in the next drop, which happens 20 years. And I just replay this video and told you so. So I'm adding a time frame. Next summer, we should have those levels that I'm talking about, in my opinion.
Yeah, I like NVIDIA. I think out of all the chips is one of the stronger ones. A lot of it has to do with the AI hype, though. So I'm not comfortable. If I was buying it long term, I would not be comfortable buying it currently at this level. But like Mo was saying, it could go to 400, it could go to 450. I'm not willing to risk that. But out of all the chips, yeah, I like AMD. I like NVIDIA. I expected NVIDIA to go a little bit lower. I was expecting to go to 100. It got to 140. No, did it go to 100?
No, it went to 160. I think that was the lowest. I thought it went
No. It had to be lower because I bought some shares and I at 140s, I think, and I sold at 160. So
106.
Yeah, 106. Okay, so it didn't hit my price out, which was exactly 100, I think, but it got close to it and then it ran up. I didn't think it was going to run up the way it did in such a short time. But NVIDIA, I think overall long term is a solid play. Out of all the chips that are the cheapest, it's Intel. And I know Intel's even been running like crazy as well. Me and Mark used to go back and forth with Intel. I was an Intel simp. Not anymore. It just had too many bad earnings after bad earnings after bad earnings. So until something changes fundamentally overall, I'm not touching that again. Luckily, I didn't lose a lot of money. All right, we have a person here in the background, Trey. So we're gonna bring on Trey. What's going on, Trey? How you doing?
Hey, I'm doing all right. Can you guys hear me?
Yes, I hear you loud and clear.
I just had a question about indicators. So I've been using the money flow index over the relative strength index, and I know that they're similar, but I don't quite understand how similar and different they are, and like what the pros and cons of using either or. I don't like RSI. I tend to like money flow indicator more. I just want to know if you guys had any like. But I know I can look on Investopedia, but I just want to see what you guys thought about those two indicators.
Yeah, I'll add my 2 cents here in a second because I'm not familiar with the money flow indicator. I've seen it before, but I don't use it. I actually use the RSI. I know you say you don't like the RSI. I like the RSI. I personally do not like to use a lot of indicators. I do supply and demand, occasionally Fibonacci, and then the only other one are the moving averages. But I do not use the money flow. Mo, are you familiar with that one?
Yeah, I'm just looking at it. I could just tell you basically it's a lag indicator. It's not a lead indicator, meaning it's taking a bunch of data and processing it. But by the time if you're day trading, it's not helpful. It's kind of like why RSI isn't helpful, because if it says overbought, and I used to think that means sell, but I've seen AMD overbought for days.
Oh, yeah.
And that just means it's in demand. Like people are buying it, and that's what you want. You want stuff that's in trend, and anything that's in trend usually goes overbought. So I don't personally, bro, watch this. My suggestion to you is look at moving averages. Those are the easiest ways to identify trend because that's what the funds are watching. Look for stuff that's based on math, so price and volume will always win. Now, moving average is also a lag indicator, but on a longer time frame, it works. So,
no, thank you guys very much. And yeah, the moving averages, I definitely use those. I've read a bunch of different books, and yeah, moving averages are great. Right now, I'm reading through Brian Shannon's anchored volume weighted average price just to learn that because it's pretty interesting just to see how confluence works with the moving averages and the VWAP and everything. But thank you guys. You guys do a good show. Appreciate it.
no problem. Thanks, Trey.
Awesome. Thank you, Trey. All right. So we had another question here real quick. It's from Sarah. No. He's talking about the money flow indicator. I know what you're talking about. You're talking about the money flow, the 4 stages where to buy. One of my buddies actually uses those 4 stages. I know exactly what you're talking about, but no, that's not what he's talking about. He's talking about a different indicator on like TradingView or Thinkorswim. I think it might be on Thinkorswim as well. So I'm not sure. Yeah, and then someone, Jacob Summers, asked opinion on QQQ drop. I think we just already covered that, right? But I guess you want to just reiterate it.
Yeah, I talked about it yesterday too. It's rebalancing there. So if something is, let's say, Kathy, she's at the end of the month looking at her pie and she's looking at where she needs to trim and where she needs to add. So someone like Kathy could have sold NVIDIA, Apple, because they're all close to very all-time high, Meta, and then she started adding Tesla and some underperforming sectors, which is what I keep telling you guys. Laggers, look for laggers. If Amazon is running, what's something that's sympathy that might go? AI sympathy was Oprah. So you could pick stuff. VR, AR is sympathy for the Apple event. So they're going after stuff that's lagging in comparison. So look for that kind of stuff. But QQQ dropping was a rebalancing act. It wasn't like anything crazy. There's something called MOC, market unclosed. It was a big order for MOC. So that's the stuff you want to keep an eye on.
Cool. Do we have any other questions? Give it a second. By the way, I'm not gonna. The person who does do the 4 stages of the money flow, we're planning on bringing him on here soon. I'm cool with him, so hopefully he'll be okay with coming on the show. Because sometimes people are a little afraid to deal with me because of my outspokenness with some of the financial literacy stuff. But I think he'll come on. I know exactly what we're talking about because we're going to eventually cover investing, which we do a lot of trading here, but I want to get into investing as well. I have some good content creators and people who are actually working for firms who are willing to come on here and actually teach and talk about, the fundamentals of looking over the balance sheet, looking over earnings, and etc. So keep an eye on for that. But all right, looks like that's it. So Mo, you got anything else?
I'm good.
All right, I have nothing else as well. Everybody. Oh wait, hold on. One more. Thoughts on SoFi? You want to go on that one first?
Yeah, it's. Why do you think SoFi is running? Do you think they all of a sudden became a better company, or people had like this epiphany that, oh my God, it's so cheap, I must buy it? So Goldman Sachs about a month ago basically sent a report to all their brokerages saying there's a list of laggards, meaning stuff that's lagging, and that's what they're looking at, because like what Kem said, 97% of the market is moving by 10 stocks. And so now this is a good thing for bulls because the breadth is getting wider. Different sector are getting the money. And yes, this is part of it is short squeeze on these stocks and part of it is real buying. And the short squeeze is causing the real buying because people are like, okay, now it's finally going back up. That's what it is. In terms of, you want to add something? Because we have another question.
No, SoFi, when it comes to SoFi, it's looking better. Fundamentally, it is looking better. The earnings that are coming out is looking better. I'm just not in the business of looking at a company that's a starter bank kind of that has a lot of student loan debt and is still trying to establish itself. Just overall, it is looking better though. I see they're doing better with their debt and everything. I just right now, SoFi, if I had to choose any bank, that wouldn't be the first one that I would look at, even though it's cheap. Now, as a trade, absolutely. I've traded
Ron, also, your homework today is pull a daily chart on SoFi and put a 50 moving average, and you're going to notice it broke the 50 moving average and had a breakout. And that's look for stocks that are doing that. Maybe we cover that next week on how to do that. But question, this is probably the last question because we're now hitting the 1 hour mark. What you think about WWR and the EV battery space? Mark, you want to take this?
Yeah. So I just looked up WWER, never heard of it, but it's Westwater Resources. It's 87 cents. No, it's down in 1 year, it's been down 32%. I don't know enough. Look, I'm going to be real with you guys. If you ask me questions and I don't know anything about the company or haven't done research, I'm not going to sit here and give you some levels where to buy or pull shit out my ass and tell you it's an amazing company, because I don't want to do that, because I don't want you to get stuck with a company or a stock that may be crap and I'm just trying to say stuff to sound smart. I'm not going to do that here. Not familiar with Westwater Resources. As for EV battery space, so TJ was talking about how he's really bullish on NIO. I like what NIO was doing with the replacing the battery there in China. I think that's a cool idea. Overall, the EV battery space, I think Tesla has that locked down. That is one thing I do like about Tesla when it comes to EV space. I think overall, there is still a massive demand for the battery. I know there's some companies out there, I believe, that just focus on EV batteries. I just haven't looked into them. But I think if you can find a good company that produces batteries, and it wouldn't be a bad idea to try to scale into a little bit of it, because I do think it's going to be the future.
For Roman, the 50 moving average on ENPH is 184.92. That is also where it can break out for a gap fill. Let me just, never mind, the chart won't share. Anyway, so 184.92 is what I would watch. If not that, then I would wait for a drop to 165. So that's a pretty big drop at 165, but I know you know this, so I'm gonna say pull an hourly chart, find out where the demand zone is. Either you buy it on a breakout, which is over 185, or you catch it on a demand. In the middle, I wouldn't touch it.
Okay, Enphase. So my personal opinion on Enphase, I like Enphase. Even as a long-term investment, I like Enphase. I've been waiting for Enphase to drop down like it has been. Year to date is down 28.36%. It dropped down to 160. I have been trading it at that level. It had a nice little run here just now. I like Enphase. I think Enphase is a great company overall. I think it was definitely overvalued for a very long time, and it was just too high, and the price was at what, 300? What's the 52? 339 was the high, and then the low was 152. And so I think if you want to be an investor in this, scale in small, because again, like any bad news, any major pullback, this could fall below 152 possibly. But here you're still the beginning phases of a recovery on Enphase, and I do like the company overall. If you look at it, it's been a massive runner for a while until recently because of the sell-off. If you look at the 5-year chart, it's up 3,500% in a 5-year period. It started running as well as at the same time that Tesla did during 2020. The only difference between that and Tesla is that it continued to run for a pretty long time until recently. Now it's selling off again. So, all right, is that pretty much it?
Yeah,
I think we answered everyone's question. So again, everyone, make sure you give us a thumbs up. Share this, please share this. And again, we really appreciate the fact that you guys have shown up today and shown us love. We appreciate every single one of you. We really do. So continue to stop by. Hopefully you are entertained and learned a little bit of something. Do you have any last words for the audience there, Mo?
Yeah. So if we could get 10 people, not a lot, we had 90 people. If we get 10 people to share this on Instagram and tag us, we'll do a class on how to find these stocks before they happen. I'll show you a simple free tool. It'll take me 20 minutes. I'll do a separate class, but we need 10. Is that a good number, Mark? 10 people to tag us?
No, F that. 90. I'm joking. That's fine. 10 should be good enough. Okay. 10
we'll
should
do
be
a class.
Enough. Yes. And you guys, you can find me on Instagram at uncultured currency. One word, no underscore, no dashes. There's a bunch of people who like to make fake accounts of uncultured currency for some reason. And you could also find me on Half Breed Observer Together on Instagram. That's my political channel as well. So make sure you go over there and check me out on YouTube. Mo, where can they find you?
OTB Clubhouse, also one word.
That was it? I felt like you were going to continue to go. All right. All right. I appreciate y'all. Seriously, really do. You guys have a safe weekend. And be careful out there. Don't fall. Biden fell. It's I know a lot of people making fun of him, but the guy's old. It was kind of sad to see. It was hilarious, but sad at the same time. But just be careful out there, everyone. Until next time, let's roll up our outro. We see you guys next week.
That's 100.